Welcome to Explain the Charts, your go-to channel for in-depth market analysis. Today, July 21st, 2025, we're putting the spotlight on Litecoin, symbol LTCUSD, which has been making some significant waves recently. The crypto space is buzzing with news that could fundamentally shift investor perception and price action for altcoins, and Litecoin is at the forefront. Just 2 days ago, a groundbreaking announcement hit the wires. Nasdaq-listed biotech firm MEI Pharma plans a massive $100 million Litecoin treasury strategy. This isn't just a corporate investment, it's a monumental step for broader altcoin adoption, echoing the early playbook seen with Bitcoin's institutional embrace. Adding to the bullish sentiment, Litecoin founder Charlie Lee is reportedly set to join MEI Pharma's board, further solidifying the partnership and lending credibility to the move. This news has already fueled a dramatic surge in LTCUSD's price, with reports of double-digit climbs as high as $111.40 on July 18th. The market is clearly reacting to this injection of institutional capital and endorsement. Now, let's turn our attention to the charts to see how this news has manifested in price action and what we can anticipate next. Looking at the daily chart for LTCUSD, we can observe the broader landscape and historical trends. Over the past year, Litecoin has experienced significant volatility, navigating a downtrend from highs around $140 in March 2025 down to the $60 range in August 2024. This period of consolidation and decline established strong support levels in the $60 to $70 range, which have proven resilient. Conversely, key resistance levels were established around $100 to $110, and then the more significant $130 to $140 zone. The long-term trend has been a slow recovery, marked by periods of accumulation and minor breakouts. Notice the high volumes accompanying some of the more substantial moves, indicating strong conviction from market participants. The overall pattern before recent events suggests a gradual bottoming process and an attempt to build a new upward trajectory. Now, let's narrow our focus to the period directly impacted by the recent news, specifically from mid-July 2025 onwards on the daily chart. We can see a clear inflection point around July 17th, when the price began its sharp ascent, breaking above previous short-term resistance levels. On July 17th, the candle showed a strong push towards the $100 mark, closing at $101.66. The very next day, July 18th, the price surged even further, reaching a high of $112.31, directly correlating with the MEI Pharma announcement. This robust move was accompanied by notably higher volume, confirming significant buying interest and validating the strength of the breakout. Following this, July 19th saw continued bullish momentum, with LTCUSD hitting a high of $114.21 and closing at $113.21. Yesterday, July 20th, the uptrend persisted, pushing Litecoin to a high of $121.51 before settling at a close of $116.63. This multi-day rally confirms the market's positive reaction to the institutional adoption news. The $100 mark, which was a formidable resistance in recent months, has now decisively flipped into a support zone, a very bullish sign. Current price action clearly reflects the excitement generated by this corporate treasury strategy. The volume accompanying these upward moves is particularly telling, as it signifies strong institutional and retail accumulation. This breakout from the prior consolidation range suggests a potential shift in the short to medium-term trend towards a more bullish outlook. Zooming into the 1-hour chart, we gain a more granular perspective of this recent price explosion from July 17th to July 20th. Notice the succession of strong green candles, especially during the core hours following the news. Each significant upward movement is backed by substantial volume spikes, which is a classic indicator of genuine buying pressure rather than just speculative frenzy. The hourly chart reveals periods of consolidation after sharp gains, where the price treads sideways or experiences minor pullbacks, allowing buyers to regroup before the next leg up. These small pullbacks often retest newly formed support levels, confirming their strength. For instance, after the initial spike on July 18th, you can observe how the price found support around the $104 level before continuing its climb. This level now acts as immediate strong support in the short term. The momentum indicators on this time frame, though not explicitly shown, would likely be signaling overbought conditions, but often in strong trends, price can remain overbought for extended periods. Traders looking for short-term entries might watch for these smaller consolidations or pullbacks to re-enter long positions, using the hourly VWP as a dynamic support reference. The rapid change in sentiment is clearly visible, transforming from a cautious grind to a confident surge. The consistency of the upward momentum, even with occasional intraday profit-taking, points to underlying strength. Now let's switch to the 15-minute chart, focusing on the last few hours of trading on July 20th to pinpoint very short-term dynamics and potential trading opportunities. From around 1700 hours Universal Time coordinated on July 20th, we see a renewed burst of buying activity, pushing Gust from the $105 range rapidly towards $120. This quick surge, visible through a series of large green candles, indicates aggressive accumulation in the immediate term. However, following this sharp ascent, the price encountered resistance and pulled back slightly, forming smaller red candles. This is a natural process of profit-taking after significant intraday gains. The level around $120 to $121 appears to be a minor resistance point where initial selling pressure emerged. Observe how the volume during this peak of buying was quite high, but subsequent selling volume was relatively lower, suggesting less conviction from sellers. For day traders, paying close attention to these 15-minute swings around key psychological levels like $115 and $120 is crucial. A clear break and sustained close above $120 on this time frame would signal continued short-term bullishness. Conversely, a break below $115 could invite further profit-taking down to the $110 support. These smaller timeframes are excellent for identifying exact entry and exit points, especially when riding a strong trend or anticipating short-term reversals. The immediate support for intraday traders would be around $115, followed by $110, which aligns with the daily chart's new support zone. Momentum is still with the bulls on this microscale, but caution is advised near immediate resistance levels. To recap our analysis, Litecoin's recent price action has been overwhelmingly bullish, directly propelled by the groundbreaking MII Pharma partnership and Charlie Lee's involvement. Key price levels to watch are the new support around $100, which has been firmly established by the recent surge. Above that, immediate support lies around $110 to $115 based on the smaller timeframes, where the price consolidated after its initial jump. On the upside, the next major resistance level for LTCUSD is the previous high around $140, observed in March 2025. A successful break and sustained trading above $120 would strongly reinforce a bullish short-term outlook, likely targeting $130 next, then the $140 psychological resistance. The likelihood of reaching $140 in the short term is moderate to high, especially if positive sentiment around institutional adoption continues to build and overall crypto market conditions remain favorable. However, a healthy pullback to the $110 or even $100 support levels is always possible for profit-taking, and such a retracement would represent a strong buying opportunity. For short-term traders, entering on dips to immediate support with tight stop losses is prudent. Long-term investors should watch for sustained trading above $100 as confirmation of a new bullish phase. Reasons to be bullish include the clear institutional validation, which could attract more corporate treasury strategies and further adoption. Litecoin's established network and history also lend it credibility. Reasons to be bearish would primarily stem from a broader crypto market downturn or if the positive news surrounding MII Pharma's treasury strategy loses momentum or faces unexpected hurdles. Always look for confirming volume with price action. Higher volume on breakouts and lower volume on pullbacks are bullish signs. Keep an eye on any further news regarding corporate adoption of altcoins, as this could act as another powerful catalyst for Litecoin. Thank you for joining us on Explain the Charts. Stay tuned for more in-depth market insights.